Well, hi, everyone. Welcome to the Buffett and Beyond Research Saturday ETF Report, November 15th, 2025. And folks, it's almost Thanksgiving. And today we're going over, again, the best and worst of another bad week. But we are retesting those lows, folks. And as I'm recording this, it looks like it might hold. And remember, if you want to live on this beach like Jimmy Buffett used to live, then you've got to learn how to invest even better than Warren Buffett does now. And let's go over what the year-to-date returns are of our favorite ETF portfolios are. And once again, gold is heading the group there, and the semiconductors is second. And look at technology. Technology and the semiconductors are just about the same in here. So what happened from last week is the XSD came down, which are the semiconductors, as we're retesting those lows as I'm recording this on Friday. And then, the utilities, which surprised us, which we went over a couple of weeks ago. And then we come all the way down here. We have housing down here. But look right in the middle here, healthcare. All of a sudden, it seems to be coming back a little bit as things settle down in the healthcare business because of what the healthcare providers are going to give the people who are on Medicare or can qualify for Medicare, what the healthcare providers are giving them in excess, so they don't go to Medicare, they go to the healthcare provider. All of that is going on because of lowering the cost of drugs, and we'll see how that affects it. But right now, boy, it's starting to come back a little bit. So let's go to the 1 week, and here is that healthcare sector at the top of the list. So we could see that just recently it's been coming back. But don't forget, everybody has been selling the semiconductors and the tech stocks and putting their money into some of the worst performing areas, and healthcare has been one of them. But again, healthcare is up 12% for the year. So it's coming back little by little by little. And then what do we have all the way at the bottom here? Well, housing is down again 1 week, this past week, almost 2%. So that has been in the doldrums even more than healthcare has been. And then the XSD, the semiconductor, you could see that it has gotten hit while this money is going into the healthcare sector. So that's what's happening this week, but it's just 1 week, and we'll see what happens over the next couple of weeks as we come into the holiday season, when maybe money will go into all areas, especially some of the beaten down ones. So let's look at the QQQ top stocks of that portfolio that we have, and you can see that we've been doing pretty good with some of these stocks. And what has really hurt us is GoDaddy down here. And boy, I was looking at that at the beginning of this year, and I said, do I really want to put GoDaddy in the portfolios? And it was doing really pretty well, and I was so unsure of that. And boy, oh boy, that's one of those things you say, maybe I should have listened to myself. So that's been hurting this portfolio. But anyway, the portfolio is up 18.5%. Now, I got these numbers very early Friday morning, and the market is starting to rally right now. So the S&P was up 13% when I got these numbers, and the QQQs are up 18.5, or our portfolio of the top stocks in the QQQs up 18.5%. Right now, the S&P 500 is about 14%, and these are up to about 20%. And when we look at the ETF All-Stars, which is our other portfolio, and that's up just to almost the exact same as the QQ top stocks in the QQQs. And again, the S&P was up 13% when I got this very early on Friday morning. And you can see, there's that one stock, GoDaddy, that's in both portfolios, and it's been hurting us a little bit, or quite a bit actually. But we'll see what happens between now and the end of the year. Now let's look at the top stocks in the XSD, which is the second best performing portfolio for the year, or ETF for the year. And our top stocks that we picked, we showed this last week also, right now up 82%, while the ETF itself is up 27%. So we're looking at almost a three times that of the ETF itself. So in other words, the top stocks that we pick, and they're right down here, the top stocks are outperforming by three times the XSD, which is the semiconductor, and the semiconductor is the second best performing ETF out of all the groups of the ETFs that we follow, which are the S&P or the SPDR ETFs. So these are 11 ETFs put out by the S&P 500, and they say here are the main groups, the 11 main groups, and of course we've added the QQQs to that. So we can see that we can outperform the portfolio just about all the time, the ETF itself just about all the time, because what we do is we pick the better stocks, the above average stocks in that particular ETF. And you can go to the computer program and pretty much replicate some of these returns that we're talking about. There's a little more that has to go into it, but we talk about that in our daily letter. So again, best performing portfolio for us is 82.1 or 82.1% for the year. And of course, you have fewer stocks in here, so you have a bit more volatility. And when we look at the past 7 years, we can see this is the chart that we put in last week. Over the past almost 7 years now, at the end of this year, 2025, which is just a month and a half away, the S&P is up 164% compounded. And the XSD, the semiconductor ETF itself, up 393%, call it 400%. But the top stocks that we're talking about, especially for this year, up over 1,000%. But, of course, we must look in here, and when the market was down, the S&P was down 19.5%, the NASDAQ was down 34%, the semiconductor ETF was down a little bit less than that at a negative 31%, and our top stocks were down 42%. So this nice 1,065% compounded rate of return over 7 years comes with risk. But look what happened in the following year. The following year, it doubled the returns of what the index or our top stocks lost the year before. So it lost 42%, but came back and gained 81%. And you have to gain that much in order to almost break even. But then we returned another 36% and now 78%, which I just showed you as of this morning, or I should say yesterday morning, because you're reading this on Saturday, up 82%. So we're actually up almost 1,100% over the past 7 years. So yeah, this portfolio has been very, very good to us, but you've got to understand that there is volatility in it. So you don't put all your money in a portfolio like this. You put some of your money, and a lot of you have written to me that you use 3 or 4 of our portfolios, and you divide your money up and you put them into each one. And so many of you have written me about this portfolio. So, yes, it's very, very good, but more volatile, without a doubt. But you're getting it in the best stocks, and the semiconductors have been doing very, very well over the past 7, 8, 10 years. And that, evidently, folks, that is where it is at. And AI is proving that they need the semiconductors and those computer chips in order to operate. And that's where so much money is going into these AI centers and the cloud centers, because the clouds need lots of computers running to store all that energy up there, or to store all those stocks and that information and those pictures that we send to the cloud. Yeah, they're all kept on computers all over the place. So it takes a lot of computer power, and that's where the semiconductors come in. So, folks, we had another tough week this week, but it looks like on Friday, and I'm looking at this at Friday afternoon, that the market wants to rebound off the lows of last week. So the market is getting ready for Thanksgiving and the holiday rally, and we'll get something. So it looks like that those, actually they were at the 50-day moving averages, the lows of last week. And it looks like, as I'm recording this right now, that those tests of last week's lows are going to be successful. So, folks, you go out, you have a good weekend, have Sunday dinner with your family. Most of all, stay safe, and we'll see you right back here in a couple of days.